But let's turn our attention now to the IT space. Now, HDFC Securities hosted 15 IT companies at their 7th annual IT conference. To discuss the key takeaways from the conference, what we can expect when the Q4 earnings begin in the following week from 12th of April, we're now joined by Apurva Prasad, Vice President of Institutional Research at HDFC Securities, on the show now. Apurva, if we could start this conversation by you giving us a broad synopsis of your key takeaways after talking to 15 companies.
Sure. Thanks for having me. So, Rima, some of the broad pointers that came about, and this is right in the middle of some of the recent macro events that were turning. So, the sense that we got is there is some caution in the near term that most of the companies did highlight. The degree would vary according to companies, but nevertheless, there is some element of caution for near term. This is a 1 or 2 quarter specific time horizon is what I'm referring to. At the same time, the medium-term outlook on the sector in terms of the tech transformation cycle, that continues. So I think that was, again, a common message across all companies. The third point would be on the Europe side. So there was a lot more pessimism about 3 to 4 months back, and this was a period when concerns on the harsh winter and gas prices and things have certainly not panned out as feared. So from Europe versus what was feared, the outlook is relatively better. And then the fourth common thread would be on margins, I would say, is there is some degree of upward bias to margins that companies are looking at, be it in the form of cost optimization or in the form of rationalization of some of the other costs.
Apurva, hi. Let's take up the first part of what you just spoke about. I think the concern on demand, because that is pretty much what everybody is grappling with right now, whether there's going to be delay in decision making. Yes, the banks aren't blowing up anymore, but whether there'll be just more sort of hesitation on part of a lot of the North American clients to sign the checks. What is your sense? And in terms of at least the fourth quarter, headline growth, constant currency headline growth, who's supposed to be the best performer and who's sort of relatively poorer off in terms of the companies under your coverage?
So within our coverage, we still expect TCS and Infosys to be at the top end on a relative basis. It would still be muted relative to what it's done historically. But yeah, from a growth standpoint, look, there are 2-3 factors at play here. So while you have slowdown in decision making and leakage between bookings to revenue, and at some stage between the pipeline to bookings. So I think the offset to that is that companies are going after a much bigger pipeline. So there's a lot more focus on going after the EN business, existing logo bounds, the new business within existing logos. So that's the segment that most of the companies are going in. So I think the offset is really coming in for that. So yeah, while it does mean sort of mixed outlook, in the near term, but the trajectory improves over a period of time, because let's not forget there is some pent-up element to the fact that there is leakage between bookings and revenue. So I think a lot of it is something which could come back potentially in H2, and that's something we.
Okay, Apurva, good morning. Thanks for joining us. Can you tell us what you're hearing on the deal wins? Because, it seems to be quite mixed. Like on one hand, you hear Sonata has picked up its biggest ever order. On the other hand, you have, some of the other companies telling us that they're not getting tech budgets for the entire year at one stretch. It's coming month by month, or it's slowing in that sense. What are you picking up on the deal wins for the large cap names as well as for some of the mid cap IT companies?
The deal bookings actually would be quite strong. They were tracking very well in January and February. And if you look at some of the deals that have been reported already by the IT companies, the bookings number per se, the TCV numbers are going to be strong. What that, however, may not translate into an equal, growth acceleration, because the deal durations are much higher than this. So which is what I meant earlier, between the TCV to ACV conversion. Those would be lower. And so you're looking at a scenario where despite TCV, which may look better, it may not translate into a growth acceleration. We saw that, in Accenture's recent result. So we see a similar kind of a trend playing out where the bookings number per se will not be a problem.
Apurva, just for this quarter, what do you think the guidance will be by Infosys and HCL Tech in terms of annual numbers?
We yet to put out our preview estimates on that, so we probably communicate that. But then it's going to be a material deceleration from 16% they did. It should be a high single digits.
And for HCL Tech, also it'll be high single digits, according to you?
That's where our estimates are currently. Yeah, so we do expect that.
And have margins bottomed out in your estimate?
Absolutely, Vipin. So I think that's one big driver for the acceleration in earnings growth. So if you look out for FY24 earnings growth or profit growth, it's significantly better than what the companies did in FY23. And a big part of that is margins normalizing. So they're sort of recouping from the impact, which was more around attrition and some of the cost of delivery related factors. So I think that is something which is coming out, and which is why we think the profit growth for the sector, which is down to 6-7%, 23, that will go up to low teens. That's what we're looking at. And a big part of that is margin recovery.
Okay, so the top line growth will be in high single digits, maybe 7 to 9%, 8 to 10%, but the bottom line growth, the EPS growth, will be in low teens. Is that correct?
That's correct. That's correct.
Okay.
Okay. Just want to get to some of your buys as well, Apurva. You have a couple of mid-cap IT names that you seem to like. I mean, there are lots of ads, but I'm focusing only on the buys. Mphasis and Persistent are those names. There's Cyient, there's I think even Sonata, there's Zenza. So you seem to be liking the mid-cap universe quite a bit. I know we're a little crunched on time, but just maybe if you could take us through some of the key thought points here. And why are you going in for these mid-cap IT stocks?
Sure. So there are 2-3 factors. So one is visibility of near-term growth. I think so. It's a tick mark on that. 2 is the possibility of upside risk to growth, and third is the quantum of growth. So I think the growth premium for some of these companies, and I'm referring to Persistent out here, which is Box and all these 3, would continue. Some of the other companies would also be a function of where the valuations are. So it's a combination of that. But yeah, our primary reason for backing the mid-tiers is growth premium relative to peer set, as well as valuation comfort on a peg basis. These would be some of them.
And is growth also the reason on the biggies you're preferring an Infosys to a TCS?
That's correct. So we believe that the growth premium of Infosys versus TCS can continue. The margin gap may not sort of come down. But yeah, on a peg basis, it continues to be more attractive. If you look at long-term averages, FY25, it's actually now gone lower than the 10-year long-term average. So I think, yeah, the valuation point is also very valid in case. But we do have an ad.
All right, Apurva, we got that, and we're going to leave it at that today. But thank you for joining us and taking us through your call on the sector and some of these individual names within the IT pack as well. We're less than 2 weeks away from the earnings, and we also, Rima, did get a little bit of a tease from Accenture, but I think 2 weeks and then we'll know what it's really looking like for the IT pack. So we are going to get into a break.